Welcome back to the Daily Journal. So let's review my trades from the New York session on NASDAQ on Tuesday. So this was the first trading day of December for me, and it was my first red day in weeks. So November was one of my best trading months, absolutely no red days, and took a 5-day break, came back excited, ready to rumble, and first trade of the day was at the 2 a.m., won that, came back for the New York session, overtraded after having a first win, but as you'll see soon, I was out of that trade sooner than I had intended. And then just started chasing, took some silly trades, and fortunately my rules saved me. I took that one win. I actually should have been done with that, but I didn't. You'll see now how it played out, but then after 2 losses, I was done. I did then switch to an evaluation account, lost that. It was actually a winner, but got greedy. And that ended up losing as well. So, yeah. Anyway, it is what it is. And if you ain't losing, you ain't learning. So, it's just how it goes. What defines you is how you bounce back from your bad days. So, let's get into it. So on the 4-hour charts, it's this 10 a.m. power of 3 that we're trading. You can already see it could be causing some problems. And I was looking for continuation, at least up to these levels over here. But going into the day, where I got my bias was on the daily charts, because we had swept out this previous month low. We then had a change of state of delivery over here. And from that, having expanded, this is now reversal, expansion, met with expansion. We were then having a retracement into this daily fair value gap. And I was looking for having this been a reversal candle, this to be an expansion, right? So accumulation, manipulation, distribution. So I was looking for expansion on this day. And when you drop down to the 15-minute chart, and this is how I got it was this trade over here for the 2 a.m. move. I'd missed the reversal, unfortunately. What I'd actually missed, I didn't see this SMT. Had I done that, this would have been a 1-minute market maker model that provided this 50 minutes reversal and changed that delivery. That's for me is one of my A++ models. I absolutely love trading things like that. And that's probably would have been done for the day. I think the fact that I missed this, even though I caught this trade, I felt like I'd missed out on gains, and I think that's another reason why, after missing out on that full win on the first trade, which we'll get into in a moment, I was just chasing. It was just a bad mindset. Wasn't fully prepared for this trading day, and it's a pity because this is just a classic buy day here. So it is what it is, though. We're here to learn, and yeah. So it's this SMT, right? You can see on ES had taken that out. We then had that change to that delivery, we had expanded, and then we consolidated going into New York. Now, here's the thing, right? ES had not yet taken out that level. Both these levels, right? So first of all, this level over here, which is the bias that I used for that final trade. And then we'd also not yet taken out those trades. So let me just rewind the clock here, and you'll see more clearly what I mean. Okay, so going into the New York Open, you can see how we had taken that level out on NASDAQ, but we hadn't yet taken that level out on ES, and this wasn't a sweep, right? We've been expanded, we're now consolidating. So if we're going to take out sell side liquidity, I'm looking for the opposite, which is not only this previous day high on ES, but we also had that previous day high there, which was the first level I was aiming for. And if there was going to be expansion, I was looking for price to trade up to, I think this was the previous day, somewhere around there, right? Okay, so we dropped down to the 1 minute since we're on the 15-minute chart, and it's this 15 minutes sweeper liquidity, which was my high time frame PDA, right? So when price traded straight into that and gave that reaction, I immediately dropped down to the 30-second, and the reason being is that my change in state delivery would only come here on the 1 minute chart. So let's just clean up the chart a little bit. this was all buy side liquidity being swept beforehand, which is bullish, right? That's the double purge theory. Basically, when both sides of the range are cleared, it leads to larger expansion. So we had dropped down to the 30-second chart at this point, and I think I was evaluating price, and eventually I got to this point over here. Now here's the thing, is that we had already swept that pre-market buy side liquidity, but this was the level I was really going for because ES had not yet taken out those levels. So my bias was intact, but I just wanted to see if we didn't get some kind of choppy price action with a pullback lower or whatever it is, right? Typically I'm trading from the 945 onward, and so I do take extra precaution if I ever do execute these type of trades. But since price had been consolidating for a while going into the session, taking out sell side liquidity, I was being aggressive. And so it was here, once I got this confirmation of a close above, that's that continuation model, right? Because we had traded into that gap as well as that order block, so it's a high probability order block. And then it closed above, so that's continuation. I immediately just marketed order in once I'd set my risk. And that was the first point where I was going to take partials, right? So I was jumping into that trade with the expectation of price expanding higher until such time that ES had taken that out. But unfortunately, it took 30 seconds or even less. And before I could maybe take profit higher and just take a partial here, I'd already been taking out that trade. So had I been able just to hold that for at least 2 to 2.5 standard deviation, or even a full extension of 3.5 and 4, that could have been a really incredible trade. And unfortunately, it just wasn't meant to be. So out of that trade at that point, so I immediately zoomed out, looking for the continuation, for the 10M continuation, right? So that would mean waiting for a close of that candle and then trade back into this. Now the fact that we closed above this, I was looking for immediate continuation because look, we had now taken out that level, but we still had that level above. But here's the thing, I was chasing at this point. This is not a very good trade. We had taken out that level. This 50 minute gap was beneath us. But I thought, okay, maybe we are going to get expansion from this point. In fact, it was over here where we had SMT with ES. And once we got a close above that, I was looking for a continuation, and this is really not an A+ trade. And subsequently, I got stopped out. And yeah, I was just looking for, and this is, you can see how, right, if I just won that trade, amazing. If I hadn't, because I got, closed dirty, I should have just walked away and come back and redo my analysis, have a clean slate. Typically, it's, my thing is once you win one trade, one and done, as I said, you're done. But I didn't really count this, and I should have just walked away, or at least had a break, because this is just straight up chasing. My model is when you trade this continuation, I look for that 50-minute gap. And this is the 1 hour here. So, I look for that 50-minute gap to be traded into. And you can see the execution here, right? There's that previous day I was gunning for, which would have been a really incredible, I don't know where I should put it, but anyway, it's up there, and that would have been a banger trade, right? So you can see I'm chasing the outcome here. So what you'll then find is that, and also on the 3-second chart here, it's just ridiculous. What I did then was actually form fitting. I was looking at, what was it, the 5-minute charts, and I saw price had traded into this 5 minutes fair value gap, then closed above this, and I thought, fantastic, right? It's dropping down to the 30-second charts. We've got ourselves continuation to those highs, and you can see I'm chasing the outcome here. I'm not thinking clearly. I'm just, basically having FOMO, right? Fear of missing out. And so once we had closed above this, let's just check that execution. yeah, so there's that 5 minutes, and then I was looking for the continuation. So having traded into that fair value gap, closing above, right, that was the rationale, because we had closed above that 5 minutes. And if you look here, for example, it's just, I need that many. You can see here we had just closed above, and again just immediately stopped out. So it was at that point where I just stepped back, took a breather, and that was me done on my funded accounts for the day. 2 losses and I'm out, and that's just unfortunately how it goes. At that point, I then had price action trade into that. So let's take it back a step here. Now this is the A plus model playing out, right? So let's go back to the 1 minute charts. Now if you look here, we hadn't yet taken out that level on a yes. And here's the thing, we had then swept the 9:30 opening sell-side liquidity. So my bullish bias was still intact. And once I saw price, take out that low, so now we got some massive SMT here, which is what you want to see. I think it's just a little low. We had, dropped into that 50-minute gap. And so on a close above that, I then entered, because we've got relative highs above, and of course we have that previous day high above as well. So it was on that where I entered on an evaluation. I stop loss at that low, because I don't expect price to come back to that level. If it does, it's going to bounce at that order block or this breaker block. And if it trades as low as that, it's expansion with expansion. It's going to get rejected at this fair value gap, and it would be over, right? And of course, had I taken 2R, this trade would have closed out. And you can see I was just chasing outcome, because I then went for that same buy side liquidity level above. I even added for continuation. I was just looking at ES saying, okay, we right here, we're going to get one final push. And I think I then went for close above this or something like that, where I added one more. And my stop loss went basically to that level. And that was that. So you can see how I got stopped out there after adding to that position. So yeah, just a shocker, absolute shocker. But you know what? It is what it is. I've learned a lot from this. Typically I would just go for this. Even if it was, not my 2R trade, and especially after having all those losses, just take the win. This loss over here, these two were just shocking trades. This, fair enough. I should have just gone for 2R. I shouldn't have, basically gone for a moon. This was a banger, right? If I had held on to that higher time frame level, that would have been an incredible trade, and that would have been me done. No need to do anything else. But I was chasing at this point. That's the ego stepping in, revenge trading, that kind of stuff. So absolute shocker, but I'm really hoping you guys can take away some value from this. And it's not all about winning. You've got to just bounce back on your bad days and take the positives, of which there's a lot here, right? The model played out. That's the reality. The variable here was the operator, that being me. And unfortunately, I let my ego get the better of me. And yeah, so I'll be back. I think it's NFP later today. So once the price action has presented itself, the model's there, I'm going to pull the trigger, because I'm not trading yesterday's price action. I'm trading today. It's a new day. And yeah, got to move forward. See you guys in the next one. Cheers.